What's wrong with Tesla given the great earnings and the stock price is actually down? Is our question that we answer today. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy this show and would like further data to help you in your investing and trading, please take time to like and subscribe and join us on Patreon. We have daily shows to assist you in your trading process, and we look forward to having you come over for extra shows, etc. Now, something is really interesting going on here, which is I'm getting a bunch of notes both on Patreon and on our regular channel regarding, whoa, what happened to the pop we were expecting from Tesla stock after the great earnings? And so there are kind of three components of this show that I wanted to look at. The first is a review of the 3-day rule, which I shared has sort of jumped into that 5 to 10 business day rule over the last 6 months. The second thing I wanted to look at is kind of a misunderstanding between Elon Musk and some of the key analysts when it comes to FSD. And the third thing I wanted to review is what's the general market process that we're in right now, because even if you do have great earnings and great prospects, you're still subject to, if the market is neutral, way down, way up, it still weighs on everyone's stock in this circumstance. So the first part of this conversation I wanted to review is we listened in on the conference call after earnings for Tesla. What came up was that there is a interesting issue that's popped up here, and that is that there's a guy named Colin First from Oppenheimer. He's one of the analysts with a $1,200 price target on Tesla, so he's definitely a Tesla bull. So he asked a very interesting question, which is, he asked about FSD being ready and the regulatory environment for FSD to be rolled out. And so this is a very sort of interesting question that's going on. So as you'll note, Colin is probably one of the highest targeted analysts on Tesla and is a big time bull. And when he asked the question, I was like, man, what a dumb question was my initial reaction. And then as you go through the layers of the question, very, very short question, but very, very smart. So what's the big deal on that question? Well, it turns out that about 10% of the market cap of Tesla currently and sort of into the future is going to be focused on FSD, or full self-driving, as it applies to vehicles being able to pick up and drop off passengers without having a driver. So there's as you can see, a layering process. So Elon answered a question that he posed by just saying, look, we're definitely working on it. We expect regulatory to not be a problem because based on data we're going to be able to generate, it'll be obvious that it's actually safer for people to be in a full FSD vehicle than actually driving the vehicle themselves. And it behooves us to deliver a product of that quality. So I was like, whoa, that's an interesting comment from Elon. And the reason it's interesting is that there's kind of a sense in the markets that most of FSD were ready to go, let's say end of 22, beginning of 23, and then really implemented 24, 25. So analysts at that level are talking with investors about how do you value Tesla as it's not only from the growth of vehicle sales, but expanding number of services provided in the form, for example, of FSD. And so that was kind of an interesting back and forth between Elon and Colin, because Elon was pointing out, well, part of our deal is that by going to a subscription model of $199, let's say, we'll have, our thing is that with FSD improving in quality, we'll get to adoption rates that are almost all of our buyers, which is a way better deal than the current number, which I believe is about a third of the people are buying it. So I felt like there was an answer from Elon that focused on why 199 for full FSD versus just a $10,000 hit. And the answer he was giving was not so much the answer that Colin was looking for, which is, hey, we want to know when the taxis that are making money without people being in them as a business will start rolling. And from what I could see, Elon kind of didn't. He kind of answered the question. He kind of didn't. And so I think that there are a lot of things pushing the stock price up, including the revenue growth, profit growth, all these different things. But sort of the icing on the cake is what's up with the FSD stuff. And if that's not a focus of being ready to go and implemented, I really think it doesn't dampen the upside potentially of the shares, but it's definitely things that make you go, And anytime you tell really rich people or organizations, when they don't have to think about it, that's when they buy quickly. When they have to think about it, that's when they do their research and really study it to determine how that component is working. The second component that we discussed is the 3-day rule, which I really believe that our 3-day rule has transitioned into like this somewhere between 5 and 10-day rule. If you'll go backwards and watch what happened to the stock after the last earnings announcement, as well as take a look at the transition into S&P, there's kind of a new sheriff in town. We used to talk about 3-day rules, where basically what happens is it takes the analysts that specialize in Tesla a day and a half to go through and update their models relative to all the new numbers that came in. And so once those numbers are all updated, they then come to a written conclusion of where they are, and then they'll ship that off to the large institutions. So we expect that today being, 48 hours since earnings were announced approximately, we're going to see a process where the firms are receiving that, and all of the fund managers that are in charge of addressing this are kind of meeting around now to say, hey, what do we see on this stock? What are the reports saying? Let's read 4 or 5 different analysts to see what they think. And then we can make our decision on what to do. And I think that decision is going to be to buy. So the issue, there's something called empirical, so what you see versus, what you hear, read, etc. And one of the things you'll notice is that as the float, the number of shares held by institutions has become larger and the percentage of non-institutional holdings becomes very small, it really has this feel of a whole bunch of folks in a back room making the call on what to do with Tesla and its stock. And then we find out about that instead of the 3-day. When they start buying and selling shares, we're entering, the 5 to 10-day rule is what it's become. And we're seeing more and more examples of this. So I do see a lot of notes with people panicking relative to the fact that we're only in day 2 of what would have been the 3-day rule. This week is kind of unusual for Tesla because usually they announce earnings towards the end of the week, not at the beginning. And so we have a crisscross problem that's happening here as well, which is that there's a lot of people with call options anywhere from $650 all the way up to $750 a share. And at issue is that we have a lot of large institutions who allow hedge funds and others to borrow shares at certain rates to basically manipulate the stock or the stock market based on the fact that they're controlling large blocks of shares, but paying a fee for it, which increases the returns for the institutions. So we're in an interesting spot where I think the pin for this week will actually stick. I definitely, what I said last week is I thought 650 or below is where we end up, because basically the stock is doing great. The profitability is excellent. The growth is excellent. Everything is solid. The problem is now we have the issue of the institutions being able to sort of gang up against the smaller investors. And it can, and I think will be, a bloodbath this week. So what should happen if this was last year is by, let's say, Thursday of this week, we start seeing a push upward of the stock price driven by the solid earnings as institutions decide to begin their buying process. As I shared to our Patreon supporters, I thought when we saw the biggest move for Tesla stock ended up being early part of next week, because I felt like the 3-day rule has been expanded to a 5 to 10-day business day rule. And then we had the issue of the fact that the market makers have an opportunity to make a killing as this week closes out, with the ability to suppress the stock heading into the big news that just came out. So can it go up 700, et cetera? Absolutely, I think that's a possibility. But I think the FSD issue combined with what's going on with the 3-day rule and how it's being sort of bastardized by folks slows the acceleration of the stock. But if you think about it, if you're an individual investor, one of the fascinating things to watch is we have a concept that one of our show watchers has helped us come up with called screwology. So how can the market makers optimize how thoroughly they screw the smaller investors? So what I've kind of felt and how I developed this is that if you look out the number of call options out there and put options, whichever side you're heavily on, those are the people that the market makers want to screw because they make the most money. And so I really think that there should be the power of the big buyers to push beyond this. But what if the big buyers are in collusion with the folks who implement the screwological process? Well, you all of a sudden have this situation where things that should happen, we think this week on Thursday into Friday, don't happen until next week, and then follow through for a couple of weeks after that. So I think that this is kind of what we're expected to see. There are also some interesting questions out there about like how big companies operate. For example, Tesla had good numbers, there's no doubt about it. $1 billion in profit, excellent. Deduct the $350 or $54 million that they had in profit from EVs, and that's still a nice 600 mil to the good. So I just believe that, that situation in general is solid. The issue is that there are some flies in the ointment. There's a delay of the Cybertruck, and they are going to replace production temporarily with Model Ys, both in Germany and in Austin. So there's not as big a revenue penalty on the Cybertruck not being there, but it does introduce questions as to, well, what's really going on here? So my overall sense here is that the market makers have to do their homework carefully to determine why did we miss, the top line revenue estimate was $11.3 billion. Tesla came in at about $12 billion. So there's a huge question hanging over Tesla currently from the big institutional investors, which is, we missed your profit by like 35 cents or 30%, which is huge. 5, 10%, okay, I could see that. But they also missed the revenue target by $800 million. And was this a one-time fluke, or are we going into a period that suggests Tesla is just growing faster than we give them credit for? And I think it's the latter. So therefore, after these folks really do their homework and ramp up their models to address unanticipated profit and revenue from Tesla, I think that this is when we start to get our bigger numbers. So for those of you who are regular watchers, until we get to at least the third day after earnings, you're not allowed to even say anything about what happened to Tesla, because if the hedge funds didn't do it in that first 6 to 8 hours after the company has announced something big, you just got to wait until the big guys tell us what their data, their careful review of the data is telling them. And once we find out what that is, then we'll all be in the loop on sort of how to manage ourselves accordingly. So I look forward to getting the answer to the same questions myself, and we're going to see it in the process of larger numbers of buyers heading, over the next couple of weeks is where I think it's going. The third thing that I wanted to cover today, and I kind of saw some comments in this regard as well, if the market is down on the NASDAQ side where Tesla sits by 200, 300, 400 points, guess what? That's effectively a mini crash. So the better companies will drop not as much as the other companies, but what tends to happen in the stock market is that you have a process where the fastest growers tend to get the highest stock price because there's anticipated growth at a high level. If the market pulls back heavily, the first people that they shoot in the head are all the fast growers. So those companies will take a sudden hit down. And then what happens is, in this case, the hedge funds will simply dump everything. And then the managers will come back on a piecemeal basis to see where real bargains can be had. And all of a sudden you see a rush back in. I remind you of the fact the market was down 1,000 points a week ago, week and a half ago, and the next day it's up 500 again. What we talked about there is sector rotation. As we go back into another COVID lockdown, what's happening is that, like, oil for me is one of the big ones that I watch every day. But in general, the whole idea is we have to rotate back to the Pfizers, back to companies that do well during COVID, that continue to do well regardless of COVID. And there are places like Amazon and others whose stock price might get hit during the downdraft for everyone, but everyone's coming back and saying, well, wait a second, a cruise ship company ain't going to do too well here, but Amazon's going to do fine. So that's what I would call a sector rotation, where people are rotating from one group of stocks back to the other. As this is happening, it's not clean and efficient. It looks kind of ugly, but it tends to work out. So my overall take on things right now with Tesla is everything is going really, really well. And we actually have a couple of shows designed to unpack some of the mind-bending things that Elon shared during the conference call that I think you'll find useful. So the next show we're going to be doing is Elon had a discussion about China and how fast they can put up factories. And there are a lot of implications about sort of how and what he's doing there. We also have some things to cover regarding where the battery situation is right now, because Tesla's consuming a lot of the global supply, and how's this going to affect other firms trying to sort of make things work. So we definitely look forward to your comments on all of this. This is Greg for Teslafaninsight. Just a reminder of our health tips. Don't forget to like and subscribe. We do have a few SpaceX shares if there's interest. We also want to encourage you to join us on Patreon for more info. The other thing we wanted to move into is our usual health tips. I'm really having a lot of success with a concept called core training as a way to reduce back pain and strengthen the body. Also wanted to, I actually went biking even in the rain today. It was awesome to stay on the training regimen. We also want to encourage you to, prior to lovemaking, don't forget a small salad or something of that sort is a really good idea, because it minimizes the blood flow to your stomach so that that flow is available to other portions of the body prior to lovemaking. We have a lot more tips, including encouraging you not to eat within 4 hours of going to bed, and others that are in our list below. We encourage you to join us by checking them out. And finally, we'd like to say, Tschüss German, au revoir, friendly Hitro, Hebrew, Hoda, Hafez, Farsi, Strazice, Russian, Nihama, Chinese, Namaste, Hindi, G'day, our friends in Australia, Hey Do, our friends in Sweden. And in Jamaica, we say, Nuff respect, walk good man. Thanks for joining us. Have a great day. And please share constructive criticism. We continue to work to get better as a channel and appreciate your help in this effort. Have a great day, and bye for now.